I'm not that particularly close to the WeWork situation or what's happened, but I do think it's emblematic of a larger theme that's occurring, which is that as these companies create tremendous value, there are different periods in time where they need different types of executives. And the value that's created is a direct result of having the right person in the right job at the right time, and having a founder that has a very enormous vision, that's ambitious, that can run really fast and can blitzscale is really critical to get to a certain point in time. And then it may be necessary to transition to
an operator.
To someone that
I'm looking at an operator right here.
To someone that can both operate the company, have a vision, but also build other things that are critically important, like a great culture and a place people love to work and that attracts great talent and retains great talent.
Do you think this says anything about the IPO market itself? I know we have Peloton tomorrow, and there's a number of other big ones coming, but WeWork, for at least this year, was supposed to be the biggest.
I think there are different things that catalyze management changes. An IPO is one of those types of monumental events that an executive may not be able to take the company through, and that catalyzes the board to have to make a decision.
Right.
Otherwise, the company could probably continue on the path that it's on. And so it's one of many different catalysts that could cause a need for change.
Anthony, is it part of like the emperor is wearing no clothes type of moment, and where every single deal is going to get a much closer look, and the impetus is going to be on that company to prove that they're worth the money rather than the opposite, which I feel like it's been for several years?
I think every situation is different as you go through them, but I think at the end of the day, can the company continue to drive value for shareholders? And if you get too far in front of yourself with a valuation that's too stretched and expectations that become unrealistic, it causes a reset of things.
But the question is there a reset on the idea, this sort of Amazonian-like idea that you can go years and years and years and lose money? I actually think the lessons of Amazon have actually been misunderstood, because Amazon had to raise money once and then was able to actually...
And the debt that they actually took on was so much smaller.
So but when you look at an Uber, when you look at a Lyft, WeWork, whether you think investors are not going to give them the rope that maybe people expected them to have.
Yeah. The most critical answer to your question is, what is the path to profitability? On a unit economic basis, on a per building basis or per order basis in e-commerce, can you generate a variable profit? And then comparing that to your fixed cost, can you get a number of units against that variable profit to drive incremental profit to the bottom line? And if there's not a path to profitability, investors are not going to continue to buy the dream and the story that's being presented. And when that realization comes, valuation gets reset on where they are at that moment in time, not what it can be in the future.